Good morning. Welcome to your daily Solo 401k webinar Q&A session with my Solo 401k Financial, where we help you stop overpaying taxes and start building real retirement wealth. Today's topic is how S-Corp Solopreneurs can lock in on mega backdoor Roth using my Solo 401k Financial in conjunction with Fidelity for tax year 2025. Here we are in December. We're done with the first part of December. So you still have plenty of time to set up the Solo 401k plan so that it's effective for tax year 2025. Keep in mind that to make the plan effective for tax year 2025, you simply need to sign the plan documents. You heard that correctly. Under the IRS regulations, you simply need to sign the Solo 401k plan documents that we draft the same day. Once you sign those documents, you can enjoy the rest of your holidays while we're here at my Solo 401k Financial hard at work. In short, by signing the plan documents by December 31st, you can wait till next year in 2026 to both open the brokerage accounts for the Solo 401k plan and make the contributions. That's true whether we're talking about employee contributions, employer contributions, even voluntary after-tax Solo 401k contributions. So under the regulations, the rule is that you simply need to adopt the plan by December 31st. And again, that means sign the plan documents. We're going to unpack that more as we continue with today's daily webinar. So this is your chance to get answers. Use the chat to ask questions on today's topic or any other topic for that matter, so we can be sure to get to them all. Looks like we already have a couple questions out there. We'll start looking at those here in a moment. All right, let's keep going here. So before you can even entertain opening a Solo 401k plan, you want to make sure you're eligible. What does eligibility mean in the context of a Solo 401k? A Solo 401k plan is a 401k, but it's for owner-only businesses that do not employ any non-owner full-time W-2 employees who work 1,000 hours or more. What the heck does that mean? Well, that means that as long as you have a business, whether it's a sole proprietorship, S corporation, C corp partnership, you need to make sure you're doing work under that business. So material services, you actually need to do the work. So it cannot be a business where all you're doing is making investments, or it's a capital gains type of business. It's got to be a business where you're doing the work, material services. Now, as long as you don't employ someone in that business who is not an owner, obviously you're an owner. As long as you do not employ someone in that business who is a W-2 employee that works 1,000 hours or more. So if that W-2 employee works 1,000 hours or more, then you would not be able to open a Solo 401k plan. Now, if that individual is an owner, then that's okay, because a lot of owners are W-2 employees in their business. So again, as long as you do not employ someone who is not an owner, then that person cannot work 1,000 hours or more in your business. Also, you can exclude anyone who's under age 21, regardless if they work 1,000 hours or more or under 1,000 hours. So why does the December 31st, year 2025 Solo 401k setup deadline matter? Well, because you want to be able to save for retirement, especially if you're going to utilize the mega backdoor Roth strategy. So technically, the December 31st, 2025 setup deadline is more for making employee contributions. If you plan to only make voluntary after-tax solo 401k contributions, or even profit sharing employer contributions, then you can actually wait to open the solo 401k plan for your self-employed S corporation in year 2026. And you can open that plan in year 2026 by March 15 of 2026. Or if you file for a business tax return extension, you can wait and open it by September 15 of 2026. You would need to make contributions by September 15 of 2026 for 2025. So the rules allow you to establish the plan in 2026 by your business tax return due date plus timely filed extension. If you solely want to make voluntary after-tax contributions or employer contributions for tax year 2025. So only if you're going to make employee contributions would you want to set up the plan now, or that's the deadline you have to meet. Of course, it's probably better to just set up the plan now so you don't have to remember next year. And again, setting up the plan simply means signing the plan documents, the adoption agreement, for example. Now, again, today's topic has to do with using my solo 401k financial in conjunction with Fidelity Investments for the Mega Backdoor Roth Solo 401k strategy. Fidelity does not offer the Mega Backdoor Roth Solo 401k strategy, but they will open up what they refer to as non-prototype company brokerage accounts for a solo 401k offered by my solo 401k financial that does allow for the Mega Backdoor Roth. So they require plan documents, custom plan documents, which is where my solo 401k financial comes into play. Okay, let's continue here. So again, Fidelity Investments does not offer a solo 401k plan that allows for the Mega Backdoor Roth strategy, but if you utilize my solo 401k financial in conjunction with Fidelity, you are going to be able to utilize the Mega Backdoor Roth strategy to the solo 401k plan that we provide. So you will use our plan documents to open up the brokerage accounts at Fidelity, which we shepherd our clients through that process. Sometimes they can be opened up online. Other times, Fidelity requires specific brokerage forms, which we'll draft, and we'll even submit those to Fidelity for you as part of the setup process. How does the Mega Backdoor Roth work at Fidelity? Well, once those brokerage accounts are open at Fidelity, we would go ahead and shepherd you through converting those voluntary after-tax solo 401k contributions to the Roth Solo 401k also at Fidelity. Let me show you an illustration here. So here's a good illustration. So this is an example of a one participant plan. So the plan would be sponsored by your S corporation. You would have 3 separate holding accounts at Fidelity Investments for your solo 401k. Note you can also use Schwab or your local bank. We're just honing in on Fidelity today because a lot of our clients like to use Fidelity Investments for the Mega Backdoor Roth Solo 401k strategy. So a solo 401k allows for various contribution types. That's pre-tax solo 401k contributions, Roth solo 401k contributions, and voluntary after-tax solo 401k contributions. You are required to have separate brokerage accounts to hold each source of funds, and that's how the funds are actually tracked. The purpose of those brokerage accounts is to also track those various solo 401k sources. When you make the voluntary after-tax solo 401k contribution, that's going to go into the voluntary after-tax solo 401k bucket. You're going to then immediately convert it to the Roth solo 401k bucket. We'll then issue a Form 1099-R to report that Mega Backdoor Roth Solo 401k conversion to the IRS. You're going to file the conversion form on our website. On the top right-hand corner of our website, there's a Forms tab. One of the forms listed on there is the voluntary after-tax Solo 401k to Roth Solo 401k conversion form. It's an online form that you submit, and that's how we are prompted to prepare that Form 1099-R. We'll then issue a copy to you. We'll email you a download copy, and then we'll also file a copy with the IRS. All right, let's continue here. Let me get to my slide here. So why S-Corp owners benefit the most? So when you're self-employed, business is an S corporation, you've got control as to how much in wages you're going to pay yourself for the year. So you can control your wages. So if you're trying to utilize the Mega Backdoor Roth Solo 401k strategy for tax year 2025, then you're going to want to pay yourself a minimum of $70,000 of gross W-2 wages. Why? Because contributions to the Solo 401k with respect to voluntary after-tax contributions, those are calculated on a dollar for dollar basis, which means the minimum you need to pay yourself is $70,000. What is more, voluntary after-tax Solo 401k contributions, the maximum you can contribute is the 415C limit for the year, which is $70,000 for tax year 2025. You are not allowed to make normal catch-up or super catch-up contributions as voluntary after-tax Solo 401k contributions. So as long as you pay yourself at least $70,000 in W-2 wages for tax year 2025, then you're going to be able to contribute that entire $70,000 to the voluntary after-tax Solo 401k bucket and then immediately convert it to the Roth Solo 401k bucket. And that would result in utilizing the Mega Backdoor Roth Solo 401k strategy. So we talked about this slide already, that you can set up and fund a Solo 401k plan by March 15 of 26 or September 15 of 2026 if you solely want to make voluntary after-tax Solo 401k contributions or employer contributions. If you want to make employee contributions, you need to set up the plan by December 31st of 2025. But if you only want to make voluntary after-tax Solo 401k contributions or employer profit-sharing contributions for tax year 2025, you technically have until 2026 to both set up the plan and make those contributions for tax year 2025. But again, you still have plenty of time to get it all set up now here in 2025, so you don't have to worry about it next year with regards to meeting the deadlines. All right, let's keep going here. So the critical December 31st deadline. So again, we've already talked about this a few times. You want to get the plan set up by December 31st of 2025 if you're opening the plan for the first time. So that way you don't forget to do it next year. But if you forget to do it in 2025 and you're listening to this recorded webinar in 2026, it's good to know that even though you won't be able to make employee contributions unless that plan was adopted by December 31st of 2025, you are able to still open a solo 401k plan in 2026 to make voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy, or make employer profit-sharing contributions. So again, if you want to be able to make employee contributions to the solo 401k plan for tax year 2025, you're going to need to sign those plan documents by December 31st of 2025. Once you sign those plan documents, your plan is effective. You're not required to open up the brokerage accounts or bank accounts in 2025. That can be done next year. Same thing with contributions. Contributions for tax year 2025 don't have to be made in 2025. They can be made in 2026 by your business tax return due date plus timely filed extension, and that's true for employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. Same thing with the employer identification number for the solo 401k. The solo 401k is a retirement trust, which requires its own separate EIN number. That EIN number can be obtained next year as well. Keep in mind that the IRS database for obtaining EIN numbers is going to go down a few days before the end of the year. So you're not going to be able to get an EIN number by then, and therefore the bank accounts or brokerage accounts would be open in 2026, but the contributions can be made for 2025 and 2026 by your business tax return due date plus timely filed extension. I know I'm repeating myself a lot, but I need to because we get these questions all the time, and it doesn't hurt to hear it multiple times. What does establishing a solo 401k plan actually mean? Well, understanding what it means to establish a plan is crucial for meeting the December 31st deadline. Here's what you need to know. Just like any legal entity, a solo 401k is created by documents. Specifically, it's a retirement trust. Establishing the plan means having the legal documents in place. It doesn't mean making contributions or opening up the holding accounts, aka bank or brokerage accounts at Fidelity or Schwab, for example. So the S Corporation specific timeline for S Corporation owners, here's exactly what the December 31st deadline means for your contribution timeline. So set up by December 31st, you're going to be able to make all contribution types: pre-tax employee contributions, Roth employee contributions, pre-tax employer contributions, Roth employer contributions, voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth. And you're going to be able to make those contributions by March 16 of 2026. If you file a business tax return extension, you would have until September 15 of 2026 to make all of the year 2025 solo 401k contributions. If you establish the plan after December 31st of 2025, then you're only going to be able to make employer contributions or voluntary after-tax solo 401k contributions, just not employee contributions. We talked about what the Mega Backdoor Roth strategy is. It's a way of making voluntary after-tax solo 401k contributions up to the overall limit of $70,000 so that you can contribute all up the overall limit, all as voluntary after-tax solo 401k contributions. It's a way to get more Roth solo 401k funds indirectly into your solo 401k plan. So most brokerage firms do not support the Mega Backdoor Roth Solo 401k strategy. But when you utilize a company like my Solo 401k Financial, that does provide a plan that allows for the Mega Backdoor Roth strategy, we can help you to hold the funds for the Solo 401k at your local bank, at Fidelity Investments, at Charles Schwab, or any other broker dealer of your choice, provided that broker dealer is on board. So when you're self-employed business as an S corporation or an LLC tax as an S corporation, contributions are going to be based on your W-2 wages from that S corporation. So you have to have the necessary W-2 wages to support the contribution to the solo 401k plan. Whether that's employee contributions, employer contributions, or voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy. So it's got to be earned income from self-employment. In the context of an S corporation, that's W-2 wages. You're going to use box 1 of that W-2, which is the gross wages. You may need to add the amount listed in box 12A to box 1 so that you get the true contribution figure. So why does earned income matter? Well, because contributions to the solo 401k plan are based on earned income. They're not based on capital gains or passive income. And depending on how your self-employed business is taxed, that drives how you report your self-employment income. This slide here talks about a sole proprietorship. You're going to use line 31 of your Schedule C. That's the starting figure for calculating solo 401k contributions. If your business is taxed as a partnership, you're going to use line 14, code A of the Schedule K1 as the starting figure. So we talked about how you can use 100% of your W-2 wages from your self-employed business up to the overall limit of $70,000 for tax year 2025 and treat that as a voluntary after-tax solo 401k contribution, and then immediately convert it to the Roth solo 401k. And if you use Fidelity Investments, we would assist you in opening up those brokerage accounts at Fidelity Investments so that you can utilize the Mega Backdoor Roth solo 401k strategy. So again, contributions have to be based on your earned income from self-employment activity. If you don't have enough earned income from self-employment activity through your S corporation, for example, then you're not going to be able to maximize your contributions. You remember, you want to use W-2 wages for calculating the contributions if your self-employed business is taxed as an S corporation, or even if it's taxed as a C corporation. Now, keep in mind that you can also contribute to a solo 401k plan, especially on a voluntary after-tax solo 401k basis, even if you participate in your daytime employer 401k. Because voluntary after-tax solo 401k contributions are never aggregated between your daytime employer 401k and your solo 401k. So if you participate in your daytime employer 401k and you also have a side business that you perform self-employment activity, if you pay yourself enough earned income from that self-employed side business, you can potentially contribute $70,000 in voluntary after-tax solo 401k contributions to the solo 401k and then convert it to the Roth solo 401k, even if you maximize your 401k contributions to your daytime employer 401k. Now, that exception doesn't apply to 403bs. So if you participate in the daytime employer 403b, you cannot make the voluntary after-tax solo 401k contributions if you've already maximized all of your overall contributions to your daytime employer 403b. That rule where you can contribute to both the solo 401k and the daytime 401k only applies to 401ks, not 403bs. So for tax year 2025, the overall contribution limit is $70,000. For those who are age 50 or older, you can also contribute $7,500 as a normal catch-up contribution. If you're age 60, 61, 62, or 63, however, you can contribute a super catch-up amount of $11,250 instead of $7,500. Okay, common mistakes to avoid: waiting too late. So this slide should say after September 15 of 2026. So waiting too late to set up the plan and make the contributions. Using the wrong solo 401k plan provider. Again, not all solo 401k plan providers provide a solo 401k plan that has the Mega Backdoor Roth solo 401k strategy available. However, here at my solo 401k financial, we do provide a solo 401k plan that allows for the Mega Backdoor Roth strategy, and you get to choose where to hold the money at, whether at Charles Schwab, Fidelity Investments, your local bank, any other broker dealer, or if you're a financial professional, you can use Altruist, you can use Fidelity Institutional, Schwab Institutional, or your own broker dealer. We have a lot of institutional clients as well as retail clients. Okay, let's see here. So next steps is going to be best to set up the plan by December 31st, which means signing the plan documents. That way you're going to preserve the right to make year 2025 solo 401k contributions and year 2026 by your business tax return due date plus timely filed extension. Again, you can open the brokerage accounts next year. They don't have to be open here in 2025. So we help our clients get everything set up by providing the plan documents, helping them open up the holding accounts, aka bank or brokerage accounts. If you use Fidelity, we'll help you with those brokerage forms as well. We'll draft the brokerage forms and we'll fax them to Fidelity for you. In some cases, they can even be opened online with Fidelity. If you use another brokerage firm, we'll make sure to fill out those brokerage forms as well and shepherd you through that process. And then we'll guide you on the calculations for making the contributions. We'll handle the reporting for that solo 401k with regards to the conversion or any other reporting. So for example, with the solo 401k, besides being the solo 401k plan document provider, because remember, in order to open and continue with the solo 401k plan, you need a solo 401k plan document provider. Here at my solo 401k financial, we serve that function, but we also include other services in our annual fee, our flat annual fee. So we'll issue the form 1099-R to the IRS if you process a conversion, or if you process a distribution from the solo 401k, or if you need to close the plan down. We'll also issue Form 5500 Easy, which is an informational return that must be filed with the government once the market value of that solo 401k plan is greater than $250,000 in value as at the end of the year. We'll file that with the IRS. You need to make sure that you request these forms from my solo 401k financial on a timely basis. As long as you timely request them, we'll go ahead and prepare and file these for you. Keep in mind, we don't have access to our clients' funds. So it's your responsibility as a trustee to request these services. And you can find more about these services by visiting the Forms tab of our website. On the top right-hand corner, there's a Forms tab. We'll also assist you with transferring IRAs, former employer plans to the solo 401k plan. Our plan also comes with a $1,500 auto contribution credit. And the auto contribution credit is essentially a way for the government to subsidize the cost of opening and having a solo 401k plan for many years to come. It's a dollar for dollar credit equal to $500 per year for a maximum of $1,500. You must open a solo 401k plan with a provider like my solo 401k financial, who offers a plan that has the auto contribution feature built into it. The auto contribution feature wasn't available till January 1st of 2024 and after. So if you're a client of my solo 401k financial prior to December 31st of 2023, then we can add this auto contribution credit to your plan. You would submit a support ticket and we would add that contribution credit to your plan, to your existing plan. So once we add this auto contribution credit to your plan, you're not required to make contributions to the plan. You're still going to be able to contribute all the way up to the overall limit if you choose to. You're not forced to contribute in order to take advantage of the auto contribution credit. You're going to file Form 8881 each year for a total of 3 years to claim that $1,500 credit in $500 increments each year for 3 consecutive years. We do have a video walkthrough and a PowerPoint on how to fill out Form 8881. It's only a 2-page form and doesn't take very long to fill out. Okay, let's take a look at some questions here. I tried to use your link for 1099-R, but confused why I asked for the date of my many distributions this year. I opened my Roth 401k early this year. I had 1 distribution for 2024, early in 2025, and 3 for 2025. Well, number one, distributions are reported in the year that the distribution is made. So the IRS regulations don't allow you to make a distribution in 2025 for 2024. If you made a distribution in 2024, that would be taxable in tax year 2024 and reportable in tax year 2024. So that's a big red flag there. So again, distributions are reported in the year that the funds are actually distributed. So if you took any distributions in tax year 2025, then they're going to be reported on the Form 1099-R for tax year 2025. If you're filling out our distribution form online, you just need to list the total amount that you distributed in tax year 2025, because the Form 1099-R lists the aggregate amount distributed during the year, not each distribution. So one Form 1099-R for all distributions made in 2025. And if you made a distribution in 2024, then that had to be reported to the government by this past March. So you're past that deadline of having to report that 2024 distribution timely. Send us an email and we can see what we can do to help you fix that situation. Let's see here, some more questions here. As far as if you process the voluntary after-tax solo 401k conversion, where you made voluntary after-tax solo 401k contributions to the solo 401k plan in 2025, then you would fill out the conversion form on our website listing the total amount and voluntary after-tax solo 401k contributions that you converted to the Roth solo 401k in 2025. That would be a separate Form 1099-R. Okay, let's see what other questions we have here. Looks like you have follow-up questions here. The link says you will send a 1099-R to the IRS. That's right. The Form 1099-R gets electronically filed to the IRS by March 31st. So anyone who processes a distribution or a conversion in 2025, the Form 1099-R gets issued to you, and then we also file a copy electronically with the government by March 31st of 2026. The issuance of the Form 1099-R that are timely requested, that's covered in our annual fee. Regarding the auto contribution credit, if you open the plan in 2025, then you would qualify for the auto contribution credit starting in 2025. If you open the plan in 2024, then you would qualify for the auto contribution credit starting in 2024. Okay. Under adoption agreement, compensation selection is 415 safe harbor option. In case of S-Corp W-2, explain more of this option election for S-Corp. That simply means that you're going to be able to use your gross wages, box 1 of your W-2 for calculating all the solo 401k contributions, whether employee, employer, or profit sharing contributions. Okay. Why do you need to do a conversion? Why just not contribute to the Roth 401k from the start? Well, you can keep in mind that the voluntary after-tax solo 401k contribution as part of the Mega Backdoor Roth solo 401k is a way to get more Roth solo 401k money into your plan. Because remember, with the Roth solo 401k, you can make employee Roth solo 401k contributions, but the maximum limit for someone who's under age 50 for tax year 2025 is $23,500. So if you want to be able to contribute more than $23,500 as a Roth solo 401k contribution, you utilize the voluntary after-tax solo 401k by making the difference up to the overall limit of $70,000 as a voluntary after-tax solo 401k contribution, and then convert that to the Roth solo 401k plan. Okay. Here's a question here. If my gross self-employment income is $70,000, could I contribute the whole amount? Yes, if it's an S corporation, and if you pay yourself at least $70,000 of gross wages, so box 1 of that W-2 needs to list $70,000. If you list at least $70,000 of gross W-2 wages from your self-employed S corporation, then you can contribute that entire $70,000 as a voluntary after-tax solo 401k contribution, and then convert it to the Roth Solo 401k plan. Because that's one of the advantages about the voluntary after-tax solo 401k contribution. It's a dollar for dollar calculation. Here's a comment here. I made a contribution to my after-tax in 2025, but attributed for 2024 because it was before the deadline. Immediately, I converted all funds to the Roth 401k. Then later in 2025, I made several contributions to after-tax and immediately converted to the Roth 401k. That's fine. Now, don't confuse the contribution rules with the conversion rules. I find individuals commonly do that. Keep in mind that conversions are reported in the year that the funds are actually converted from the voluntary after-tax solo 401k holding account to the Roth Solo 401k holding account. Whereas the contribution rules allow you to make contributions for the prior year by your business tax return due date plus timely filed extension. So if you made a contribution in 2025 for tax year 2024, then that's number one, that's fine. But if you converted those funds that you contributed for 2024 and 2025, if you converted those funds in 2025, then that's going to count as a conversion for 2025. And that's fine, because you can also process another conversion in 2025 for your 2025 contributions, which appears to be what you did here. So for example, let's say you made a $50,000 contribution to the solo 401k plan in 2025 for tax year 2024. As long as you did that by the business tax return due date plus timely filed extension, and then you converted those funds to the Roth Solo 401k, that's fine. And then let's say you made another contribution for tax year 2025 and 2025 to the Solo 401k and converted those to the Roth Solo 401k from the voluntary after-tax Solo 401k. Well, both amounts will be populated in one Form 1099-R because they were both converted in 2025, because the conversion rules require that the conversion amount is reported in the year that the funds are actually converted to the Roth Solo 401k. It's not when you make the contributions or for what year the contribution was made for. Good question. So is there anything I did wrong? Well, I don't think so. Based on what you're telling me here, it looks like you did two conversions this year, voluntary after-tax solo 401k funds. So no issue at all. Just one Form 1099-R would need to be issued to report the total amount converted in tax year 2025. And that Form 1099-R will be issued in the beginning of 2026. As far as the date of conversion, you just need to list the total amount converted in 2025 and just put the date of the last conversion, because again, just one Form 1099-R gets issued. Okay, so that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. Until next time, have a great rest of the day.